While Bitcoin BTC as an investment is still attractive because it is an independent, alternative, and uncorrelated asset, a growing institutional investor base could increase Bitcoin's correlation with other traditional assets, according to Fidelity Digital Assets (FDA), a crypto arm of US-based mutual fund giant Fidelity. As BTC is becoming increasingly integrated into institutional portfolios, it could become more and more correlated with other assets, and external events might have a growing impact on Bitcoin, especially if Bitcoin's narrative converges on a single use case, Ria Bhutoria, Director of Research at FDA, said in a recent report, named Bitcoin Investment Thesis. As for now, due to its multifaceted narratives and persisting retail and growing institutional sentiment, Bitcoin is fundamentally less exposed to the prolonged economic headwinds that are threatening other assets. As such, it could be a potentially useful and uncorrelated addition to an investor's portfolio toolkit, the researcher said. According to her, there are 4 reasons why Bitcoin has exhibited low correlation in the past. Namely, the report comes in the light of recent news that Fidelity plans to start its first Bitcoin fund. Meanwhile, Chamath Palihapitiya, CEO of venture capital firm Social Capital, chairman of commercial spaceline Virgin Galactic, recently argued that BTC can't be correlated to traditional assets because it's the opposite of today's financial infrastructure. Unlike conventional alternative investments used for portfolio diversification effects, Bitcoin also comes with benefits like liquidity, accessibility, and low fees. According to the report, Bitcoin is relatively easy and inexpensive to enter and exit, as it trades 24/7 with a substantial daily trading volume. Besides, it is significantly more accessible as it democratizes access to investing. FDA also showed how annualized returns of 60/40 portfolios with Bitcoin allocation outperformed a 60/40 portfolio with no allocation to Bitcoin. However, the report emphasizes the following considerations for future investments. In spite of that, the report acknowledged Bitcoin's ability to mature into a fully-fledged independent asset class. And while Bitcoin simply does not fit into defined asset categories, it is still a legit alternative for institutional investors looking for alternative investments in a portfolio. Meanwhile, many in the Cryptoverse took Fidelity's hypothetical example as a recommendation for considering a 5% allocation in Bitcoin. In either case, recent reports show that institutional investors seem to be more interested in this alternative asset. US-based investment company Stone Ridge Holdings Group recently revealed that it owns BTC 10,000, while Jack Dorsey's Square said last week that it acquired $50 million worth of BTC, after MicroStrategy, an American software company, used its balance sheet to buy over $400 million worth of BTC.